Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, and I'm recording this late Friday morning. As usual, February 17th, our offices will be closed for the holiday on Monday, but we'll be back at it with Top 10 Trader and everything else on Tuesday. Okay, into the market. A couple weeks ago, 11 days ago, the market kind of got a little bit ahead of itself. The indexes broke above the December highs and kind of whooshed higher for 2 or 3 days. We saw the most number of stocks hitting new highs since November of 2021. And kind of a low bar, of course. 2022 was a bear market, but still. And we saw some speculative stocks getting going and stuff like that. So, I mean, a pullback was likely, didn't have to happen, but it was likely. And I think I even tweeted, it's about kind of how you pull back and how you digest those gains. Do we melt down like we did 2 or 3 times in 2022, or do we hold firm? So far, listen, I'm not a huge fan of, Thursday's action, which was yesterday as I record this, and this morning we're down again. But so far, just looking at the evidence, nothing's really changed, okay? Most indexes are hanging around their 25-day moving averages, still above their 50 days. They're also hanging above longer-term moving averages too. The broad market is still healthy. Most individual stocks, there's been a couple of potholes, earnings season and stuff like that, but most individual stocks are holding pretty firm, the ones that moved, and we're seeing more names trying to emerge rather than submerge, at least so far. We'll see how it goes, okay? We're also not seeing, I'll show you, any sort of big rush into defensive stocks or things like that. So listen, the evidence can change, and I'm not saying you should be buying with both fists here and, cannonballing into the pool, whatever analogy you want to use. If you've been stepping into the market, though, I think you can pretty much hold what you have, put in your stops, honor your stops, but see how it goes. So far, the trends are still up. The broad market's healthy. Things are still looking good. And it's really on the bears to prove that they're kind of taking control from there, okay? Now, we'll see what happens with the Fed. They've been starting to jawbone here with higher inflation. But I'll show you a couple examples of so far how this rally is different than the ones that petered out last year, okay? In Cabot Growth Investors model portfolio, we did a little buying this week. It was really just filling out a existing position. We had a half stake. But we're still about 35% in cash. So definitely kind of leaning bullish, as I like to say. We've put a lot of money to work, but not, flooring the accelerator per se. And really from here, it's just using the market as a feedback mechanism. I do think if the market can hold in here and accelerate higher, next week or 2 weeks from now, I think there could be a lot of good pullback resumption buys, as I call them, PBRs, in a lot of stocks. But obviously, if the sellers really take control and things start to melt down and the Fed gets aggressive or something like that, we'll play that by ear. But right now, we kind of like where we're at, and we're just kind of taking it day to day, week to week. So far, so good, but we're also remaining flexible, okay? So let's hop into the charts. I'm going to start with stock charts this week just because I wanted to show you a couple different things. The chart here in stockcharts.com, you can use it for free with ads. There's also a paid subscription. So we use it all day long just for charts. Not really screening, but just for charts. It's really a great product, so check it out. So this is the percent of stocks. This chart right here is the percent of stocks in the New York Stock Exchange above their 200-day moving averages, okay? And my cursor, I don't think you can see here, but basically this chart goes back to last March, so almost a full year, I guess a full year. You can just see how it kind of hit its head on the wall. It was about 40 to 50% 2 or 3 times last year. And pretty quickly, things started to really kind of come off. When the sellers started to get to the market, it was, pretty steadily down, 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 down. This time around, we'll see how it goes. But, it's been a couple of weeks here in February. Yes, the percent has come lower, but we're still holding at much, much higher levels here. And just in terms of how much ground we've given up on this chart, so to speak, the bottom line is most things that have moved above their 200-day lines in the past month or two are still above their 200-day lines, okay? It's just a very basic, measure of market breadth, okay? This chart here is the same thing, but for the NASDAQ, it's even more pronounced, okay? You can kind of see going back to the past year, and so far, yes, it's come down. It got hit a couple of weeks ago, but notice how this week, we've had a couple of bad days. You can't really even see it on the chart, okay? So still holding at, I don't want to say high levels. I mean, this number is 48% for the NASDAQ, okay? But it's still holding in there pretty well. And last but not least, I'm just going to show you our template here. This is let me make this a little bit larger for you. This is a template for the 2-second indicator, which is just the number of stocks hitting new lows on the New York Exchange. This goes back just 5 months. But again, you can see even with the recent selling, and I haven't checked it here in the last half hour, but I think it's still in actually single digits as of this morning. We're still in the, single digits, 10. I think yesterday got up to 15. Very low, below 40. and just well controlled. Maybe the market slips here and you get 1 or 2 days where new lows spike. You can kind of see that. When I say spike, I mean to like 40 or 50. But certainly you'd expect if the bottom was going to be falling out of the broad market, you'd probably see it by now. Okay, so this is just sort of, to this point anyway, a difference of what we're seeing, even though the Fed is talking the same way and the inflation readings are, well, I mean, they're better, but they're, still bad or worse than expected or whatever. Even though the news is sort of similar to last year, the market's handling of the news so far is different. Okay, now let me take this opportunity, if I can do this correctly, to hop back into MarketSmith. There we go. Okay, MarketSmith's product of Investors Business Daily. You can learn more at marketsmith.com. I don't want to talk about Ford. That was just for a holding slide. So just going through the indexes, you can just see, again, if you didn't know anything, if you went on vacation, lucky you, the last couple of weeks, okay, and just came back from Europe or whatever, you're just looking at this chart. Here was that kind of accelerated, not blow off, but sort of a short-term enthusiasm, right? Breaks above these resistance levels. We go straight up for a couple days. You get this gap in the NASDAQ. But since then, it's just been kind of a nice, call it a flag, call it whatever you want, and it's still above the 200-day moving average, which is pretty good. Now, I mean, again, can we come in next week? I always say this. Yes, of course, we can come in and things change, but I'd rather just go with why anticipate? Why don't you just go with what's there? Because it might never happen, okay? So far, so good on the pullback. Same thing with pretty much all the other indexes, okay? This is the spiders this morning. Kind of tagged the 25-day line, so a little bit weaker now than the NASDAQ, which I find kind of interesting. And sort of back into this support zone, if that's what you call it. I'm not a big support resistance guy in the indexes, but overall though, the intermediate term trend is up. And again, just kind of living above. The other thing too is these things are now living above all their 25, 50, 200-day moving averages, whatever moving averages you're looking at, 150-day, whatever. They're living above that, okay? IWM, this is Russell 2000. It was a little sloppier here initially on the pullback, but it's still holding the 25-day line. So it's and holding this, December high. So it's hard to say anything too bad about it. MBLY, same sort of thing, a little bit better. This really looks a little bit more like the NASDAQ. Again, living above all these moving averages, above even the 25-day line. And by the way, a lot of these indexes above where they were a few days ago. Okay, so even though the last couple of days, not so fun, really still higher than they were a week ago type thing, okay? And the New York Composite actually has been a little bit weaker, still positive intermediate term trend. But you can just see it's kind of flattened out here and is sort of not that far above the 50-day line. But even so, if your weakest index is near, well above the 50-day line, the intermediate term trend is still pointed up, okay? Other thing, just real quick on a few different things here, sectors. But this is the IBD Mutual Fund Index. It's a collection that they put together of growth mutual funds. So this is real money investors, and I assume, I don't really know, I think they just kind of average the NAVs every day or whatever. But it's an index, and you can just see it got ham-boned in 2022, bottomed out. And I've shown this before. And just, it doesn't update. It's like a mutual fund. It doesn't update during the day. So maybe it's down here somewhere. But overall, again, you're just seeing this, thrust higher and a pretty tight, reasonable consolidation in here among growth funds and among most indexes, okay? Running over to, I like to look at always at the XLP. Now, I would say the last couple of days, you're kind of seeing a little bit of outperformance from consumer staples, which is the ultimate defensive sector. But even on the week, you're looking at the staples are up, the XLP's up as I record this, 1/3%, or I guess right now 1/4%, it keeps changing. The NASDAQ is up 0.17%. So, I mean, it's outperforming this week by, a hair, basically. So we're not seeing at this point some sort of thing where the NASDAQ's coming in, but the XLP's heading higher. We'll monitor it. It can change, but our aggression index is still sort of technically positive. And then just a couple other sectors, sort of this is more market-based, but this is the semiconductors, always kind of a growth tell usually for the market. Again, a couple of bad days here, but still above the 25-day line, well above kind of support in here. Looks like a normal pullback. And then just as for the sector itself, I just wanted to point out, because this was kind of trying to emerge, you can see here in January, this is the XBI, which is, biotechs, medical, which were definitely looking like they were going to be ready to be leaders here when the market turns. So far, that really hasn't been the case. They haven't been bad. There's been a few that look good, but it's been more mixed. And I just wanted to mention it here because you kind of had this rally. This one is a little sloppier, but it is kind of, again, I don't want to I'm not huge on, just support or whatever, but 50-day line, prior support. So I kind of feel like biotechs in general, maybe medical too, but biotechs in general, kind of a key area here. If they can hold here and really resume, maybe the group is ready to finally make a move. But I'm just kind of highlighting that as I was flipping through charts, okay? On to stocks, individual stocks. There's a lot that just look fine. So this is Allegro. I'm not sure if I mentioned this, or Allegro and Axcelis, ACLS, look like two new leaders sort of in the chip space. I think I mentioned Allegro last week. This is more of a chip maker. Axcelis is chip equipment. And you can just kind of see very tight in here. This was in December. Rejected, bear market, rejected initially, but finally tightens up and then goes banana. Look at this volume right here. Bananas, basically breaking out of a huge IPO base. Their chips are tied to electric vehicles and stuff like that. Just notice this 3-day volume cluster on the breakout on earnings, boom, 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 right up here. And the stock has shown just absolutely no ability to pull back yet. Now, at some point it will pull back, and maybe it goes sideways for a month or two, that sort of thing. But the moving averages will catch up, probably provide an opportunity, but just one you want to flag and on your watch list. Here's a name that's kind of surprising that I was surprised to see, but this is Meta, Facebook, not my kind of name, but growth, you can see the estimates are kind of back on track here, up 12% this year, 20 next year, so who knows. Usually these sort of off the bottom, straight up things do need to build a new base, basically a new launching pad that's kind of more well controlled. But I'm just sort of looking at it because it did obviously show extreme action on earnings. And now you've gotten this pullback, and yes, it's eating into the gap and all that. But to me, again, this just looks like sort of a classic so far pullback. Maybe you wait. I mean, you can decide what to do, but maybe again, you wait for one of these pullback resumptions. If the stock just keeps going down, you're not stuck with it. But if it does resume, it could start get going. Anyway, Meta looks pretty good. In the medical field, there are some names, like I said, look good. So Dexcom has been tricky. It's an older name, so you kind of wonder, but no net progress for a while. But this does look pretty constructive in here. It did pop on earnings last week, pretty good volume. I just flag at the very bottom, not to get in the weeds here, but this is what I do. 4 weeks tight, basically right at the lows here in this base. So now you kind of have this 3-month structure. Earnings are out of the way, that sort of thing. This week is no great shakes one way or the other. Low volume on the pullbacks. That looks pretty good. Insulet is also in the diabetics field. This was in top 10 this week. I just think it's a really nice setup. I mean, they have earnings next week on the 23rd. So, buyer beware. Do what you want with it. It has been obviously underperforming a little bit because the market's been generally healthy this year and the stock has just gone sideways. But to me, you just have this straight up move and now just straight sideways. So whether you want to just wait for earnings or nibble or whatever, but if we do get some sort of decisive move out of here, it would be pretty interesting. It is a little thinly traded, just share wise, but just something I'm flagging out there. Boot Barn, I think I mentioned this before. Again, you kind of have this, it kind of looks like Crocs, which actually did well this week too, but huge pandemic run, huge crash. Not much of a bottom building process. You'd like to see it a little bit longer, but definitely accumulation here before and then on earnings a couple weeks ago. And again, it's just kind of classic bull flag. I'm not a really technical pattern guy, but just like, this doesn't look like there's a ton of supply out there. It looks like, some people are taking some profits, and maybe there's some people who are adding to their position when it dips and the market has a bad day, but certainly nothing that's coming unglued. So we'll see how it goes, but that looks proper so far. And then this is 5 below, which doesn't even, again, it hasn't shown any desire to pull back at all. I mean, I don't have like a 10-day moving average, but that's probably what it's riding. Still would like to see, I wouldn't be chasing things, but you'd like to see some sort of pullback. But overall, just when you see that sort of resilience when the market is chopping around, it's just something I do tend to note. Arista Networks, this one's been, I've told this story before. It looked like it was getting going. This was back in October, November 2021, but of course that's when the bear market was going to start, so that wasn't happening. It did hold up pretty well, but eventually went through the ringer. But net, it really didn't, it didn't get killed too badly. And even though there's some CapEx reductions and all this, the stock is now, tightened up again right at these lows. That's kind of a clue. And it's been up 1, 2, 3, 5 or 6 weeks in a row, and it reacted well to earnings. It was a little helter-skelter this day opened down, finished up, but it reacted pretty well to earnings. It's getting hit a little bit today, but overall looks like a decent prospect there. Some metals names look good. SCCO, this is Southern Copper, has just been cool as a cucumber in here. Again, it had this sort of base run to start the year, and now just kind of, nice and tight as it sort of pulls back. Maybe we get a shakeout on it, to kind of shake the tree down to the 50-day line. But SCCO, that looks like a pretty good setup to me. Arch Coal reported earnings yesterday. Again, with breakouts and commodity stocks, tricky anyway. Breakouts in this environment are still kind of tricky, but just flagging it with this nice earnings move, pretty big dividend, blah, 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 cash flow and all that. But just kind of a nice long structure, and it kind of tightened up here in recent weeks. So let's see if it can kind of resume its uptrend. This is SRPT Therapeutics, but Mike, I thought you just said biotechs weren't that good. They're not, but that doesn't mean they can't. They're at a key level. It doesn't mean they're falling apart. And this is SRPT. Now, they're losing money and all that, but it's a pretty good story. And you kind of have this, you even see this shakeout here back in November, but you kind of have this base now on a base. It really hasn't done anything wrong. It's just kind of sitting there. And I don't know, they don't have an earnings date yet, but we'll see what happens. Can the stock, some of these things that have been sitting around, underperforming a little bit, but still look proper overall, can they resume their uptrend? So I wouldn't say it's a great setup here, but just something that I guess on the back burner I'm kind of keeping an eye on. MBLY is interesting. It's a hot potato. This is MBLY. It moves around 5% a day or something. So, but it did kind of come out of the short IPO base. These short IPO bases usually don't lead to like a 2-year run, but they can lead to a multi-month run if the market's in a good mood. So, a few ifs and buts there, but overall, nice breakout. I guess it was right after earnings, right around here, but nice breakout. We're starting to get this pullback. Maybe it settles down there for some sort of entry point. Wesco, you can see just all different sectors look pretty good. It's not like, software looks good or chips look good and everything else looks terrible. No, things are handling themselves pretty well. This is WCC. This is one of those companies that made a ton of money in the pandemic. Everyone thought earnings would come back down to earth, and they're not. So you can see it had a huge run here and just a nice consolidation. It finally kind of tightened. You can just see how the weekly bars are just nice and tighter and less, up, down all around. And then it gapped up on earnings last week. I think we actually might have missed our entry point here in top 10. But anyway, just a name that, nice volume on earnings. Maybe you get a pullback or some sort of consolidation going forward. Just a couple more names. Uber, I think I mentioned this last week, but Uber, Lyft got destroyed last Friday. This is Lyft. This day right here was 30% or 35% or whatever. So that pulled Uber. Uber had its own earnings. It kind of broke out or whatever, but it kind of had this rush higher. I think it kind of had a quick shakeout, but found some support. Obviously getting hit today again, but overall looks pretty decent. And just last but not least, a couple of financial names. Morgan Stanley. Again, I don't want to use these as market indicators, but you wouldn't think that this would be holding up so well if the market was about to get destroyed. 100's been a little bit of a tough nut to crack, but looks pretty good. And then this is more of not a bull market name strictly, but this is Stifel Financial. Not a big mover, but you can see, it got hit here during the decline, kind of a cup with handle if that's your thing, and just nice and tight in here, just a character change for the stock. But financials as a whole, just looking at this is XLF. Yeah, okay, not the leading group. In fact, I'd say it's been underperforming a little bit. But again, holding the 25-day line so far today, so not too bad. So just back to the market, I think it's just, if you're following the evidence and not the news, I think you kind of have to be leaning bullish here or leaning positive or whatever you want to call it and see how it goes. Now, maybe by the close today, I'm recording this, it's 11 o'clock in the morning. Maybe by the close today, the NASDAQ's down here and things aren't looking as good, or tomorrow, Tuesday when the market reopens. Okay, but so far, just taking it as it is, I don't think there's enough evidence to be fully on margin and 1999 is coming and let's go. Or, it's not 2020 out there with a pandemic rally. But there's been enough change in evidence, enough bottoming out, enough stocks looking good that I think you want to give them a chance while also remaining flexible, keeping your stops in place and just taking it day by day here to see how this pullback plays out going forward. Okay, that's all the time I have for today, for real. Thanks for listening. Have a great long weekend, and come by again next week for another Cabot Weekly Review.